This is the briefing for Thursday, October 2nd. First, I want to apologize because last night's briefing was supposed to go out at 6 p.m. Eastern Time, which it typically does, or it's set to go out automatically at 6 p.m. Eastern Time. It did not go out. I'm not sure the reason why. I did not find out about that until this morning, in which case I had it forced out this morning. But I want to pick up where I left off kind of in last night's briefing. And I want to kind of couch my comments tonight based on the fact that the way I analyze markets is with market development and market structure. Market development meaning the trend in price in multiple time frames, and market structure meaning the internal components of that index, whether it is strengthening or it is weakening based on the internal components or market internals that are corresponding with price development. And what it does, it gives us an indication as to whether a trend in whatever time frame you're looking at is strong and increasing, or whether the trend is beginning to decline from an internal perspective, which would suggest then some type of pause, counter trend rotation, or maybe even an end to that trend and a reversal of the trend. And one of the things that I look at, probably one of the most important internal components, is with volume. Now, volume is basically very important because it's the fuel that gives the trend its energy to continue in the direction of that trend. So understanding what happens with volume also would be very important within volume itself as to whether volume is increasing from a buying perspective or whether it's beginning to increase from a selling perspective. Now, it is always the case, and this is not statistical, and I've said this before in briefings, but it's my psychological way of looking at price development and price structure, is that if there's a divergence in the market internals, if the market internals are beginning to weaken in terms of the developing trend, then that poses a 70% probability, once again, not statistical, but just for my psychological purposes, that there is going to be a trend change or a pause or a counter trend rotation. In other words, the trend is weakening, so it is not likely to continue. But there's always a 30% chance that the trend will continue and that the internals will correct to support price development. That typically happens around a news event where the perception of value is changed on the part of traders and investors, and it appears that the trend would then continue based on that, because the divergences that we would see with the internals in terms of price would then be eliminated with the internal strengthening to support price. So based on that, I want to couch that with the fact that what I'm going to say tonight and what I kind of hit on last night is the fact that the internals of this market are not beginning, but have been weakening over time. And it appears that they are continuing to weaken. And probably the most significant is what's happening with volume and within volume itself. Now, total volume is total volume on the NYSE. This is total volume on the NASDAQ. Net volume is up volume minus down volume. So you can see the trend in total volume on the NYSE is increasing. So volume is beginning to increase as price has been moving higher. In net volume, though, it appears that while volume is increasing, there is less and less up volume and more down volume, because the trend in net volume is down, which would send a huge red flag if you're analyzing the market as to whether this trend has the ability to continue. Now, once again, this could all change based on a news event, and we may even be seeing something changing within the NASDAQ. Now, the NASDAQ, you can see this was NYSE. You can see the downslope of how down volume is beginning to overcome up volume. This is NASDAQ total volume, and you can see how dramatically it's been increasing. But look at what's happened with net volume. I mean, it has absolutely collapsed in terms of the NASDAQ. Now, this is what happened in today's trading. So this may be an aberration. This may be something else going on. I don't know. So we're gonna have to see what happens in tomorrow's trading to see what happens with this. But if you look at that just in today's, you can see that today's volume was down on the NASDAQ as opposed to what this trend was, but net volume was up and up pretty dramatically. So, and also there's a lot of other things going on within the NASDAQ itself in terms of AI and some of the chips and whatever. So it's gonna be interesting to see how this resolves itself. This was pretty dramatic in last night's briefing that I discussed, that this is just something that is sending a huge red flag into the market, or at least into the analysis that I do, to be very cautious of this trend to the upside, at least at this point in time. So keep this in mind, and if you can get net volume on your charting software, it certainly is worthwhile looking at and comparing it to what's happening with total volume, because this is certainly saying that there's more selling volume coming in as opposed to buying volume, since net volume is up volume minus down volume. So up volume is decreasing, total volume is increasing. That means that down volume must be increasing and picking up what's happening within here itself. Now, in today's trading, you can see we had a sell-off which followed pretty closely to what I said in last night's briefing. Came right down to support, and then of course we bounced off that support level and traded higher in today's trading. Same thing happened in the Qs. You can see we came right down, tested this 603 level, and you can see it was tested in this hour, and this hour, and buyers came in and drove price back up and did not let it decline below that support level. Same thing happened in the spiders. You can see the buying tail and a buying tail. Then right here, another smaller buying tail came in as well. So it's going to be interesting to see what happens now in terms of the ETF indices themselves. This being the spiders, this is total volume for the spiders, and you can see that that total volume on the spiders is declining pretty dramatically. I need to change that. There we go. And the same thing is happening with the NASDAQ. So the trend in total volume on the spiders and the Qs is declining as well. Basically, it's been flat in the Russell. Now the Russell finally did trade above this 243 level. Next upside resistance is going to be about the 246.50 area. And then of course you can see what's happening with market breadth. This is market breadth in the spiders. Now you can see this decline would look like it was going to be something more substantial earlier today, and then it just bounced right off of support. But you can see in the S&P 500 only 57 shares positive, yet we got this type of rally. So that gives me a lot of concern over what's happening within this rally. You can see this part of the rally, we had only 674 shares in the NASDAQ positive. And then in the Russell, we were negative 128 shares, even though we traded above this important resistance area. So hopefully you're going to get a picture here of what's happening from an internal perspective, and that while most traders would sit back and say the trend is up and it's going to continue, and they could be right, because there's a 30% probability that would say that potentially there's some news event coming out and the internals are going to correct to support this rally that we're seeing. But unless or until that happens, it's going to be very, very interesting to see how this divergence in the market internals is going to be reconciled with price. Now we are at a point here. You can see we are still neutral in the indices. This is NYSE, where you're neither overbought nor oversold. Same thing with the NASDAQ, neither overbought nor oversold. And that comes from what's happening basically, because this indicator I use is basically based on what's happening with the internals. And the internals are just really not going anywhere. They're flat. You can see, look at breadth in the S&P 500, basically flat. Breadth in the NASDAQ, a little bit more volatile, but basically flat, really not going to an extreme. And the same thing with the Russell. You can see it's been basically flat as well. So that's why the overbought, oversold indicator is just floundering at neutral right now. One other thing I want to point out, and I did this in last night's briefing, this is the percentage of stocks above the 50 and 200-day moving average. This is a 50% 50-day moving average, and this is the 200-day moving average. Look what's happening with the percentage of stocks above the 50-day moving average. This is in the S&P 500. Now, it's going to take a little while longer for the 200-day moving average to catch up with something like this, because this is a longer-term indicator as opposed to this. Looking at what's happening in the NASDAQ, you can see the same thing is happening in the NASDAQ. You can see from here, from this price at that level of stocks above the 50-day moving average, and look what's happened here, where it is here. So you can see that divergence, and then you can see what's happening right through here as well. And then in the Russell, it's even a little more dramatic. You can see that the trend in price is down pretty dramatically, and it appears to have turned already in the 200-day moving average of stocks. So you can see pretty clearly here today that the indices are, from an internal perspective, very weak and appearing to continue to weaken. I'll check the aberration that we saw in today's trading with the net volume in the NASDAQ tomorrow. It's going to be very interesting to see how that's reconciled as well. But anyway, sending out a red flag, a caution flag anyway. If you've got long positions, tighten up your stops. I would be very cautious, at least at this point in time. Have a great night, and I will pick this back up again tomorrow.